I think we're live. I think we're live. Okay, let's go. Let me tell everybody to pull up on Discord, Instagram, WhatsApp. Let's go. All right. Okay. Let me share the link. There you go. Okay. I'm live on YouTube. There we go. Okay, there we go, there we go, there we go, there we go. All right. So as promised, I said I was gonna go live tonight on YouTube. Um, even though I think I am kind of late, life got in the way, but still I managed to keep my promise. So I think that's all that matters, right? That's all that matters. I hope the sound is good. Let me check again. So you guys tell me. Sundays are for Saikida. I see the comments. Okay, you guys let me know if the sound is good. I want to begin now. So I'm just gonna be looking at the comments here on the other screen. All right. Let's look at the comments. All right, there we go. I'm just gonna look at the comments. All right, it's perfect, bro. Okay. Let me keep this here so that I can constantly check on your comments, guys. All right, so we're going to do a weekly focused for we're going to do DXY, we're going to do obviously EU, we're going to do gold, and we're going to do Bitcoin, right? BTC. What else should I add? Maybe Nasdaq if we have time. We just do a quick look at Nasdaq and ES. I think those are the 1, 2, 3, 4, 5, 6, right? All right, so let's begin, guys. So we're going to look at I'm looking at DXY. I like to quickly do like a quick scan on the 3-month time frame every time, just to get an overview of where we are, in terms of price action. I'm not going to dwell much on the 3-month time frame. Just looking at structure, right? So, well, looking at this is the current dealing range that we are trading in, or the price is on. I'm not going to look much on. I'm not going to dwell much on whether we're going to go up here or whether we are going to go down here. So I'm just going to look at I'm going to focus on the recent dealing range. Obviously, the recent dealing range being this range here that we are currently on the 3-month, and obviously in the past few months we were on this dealing range here, swing low to swing high, right? So we stayed here for long, so now we finally got to break out of that dealing range, right? So I'm just going to give a quick look, and I'm going to go to a monthly, and then I'm going to go to a weekly, and then I'm going to go to a daily. That's where I'm going to end it, all right? But before we do that, this is where this is what I want to focus on. This is what I always go to first. This is a roadmap for the week, obviously. So here, this is the first calendar for the week. Obviously, you can see that we have a bank holiday on Monday, which means as I won't be trading, I won't be participating in the markets. I'll just be, maybe if anything, I'll look at like Bitcoin or something, and some altcoins, obviously. I'm not going to be forcing gold to move to give me like you know an impulsive move, on a bank holiday. Obviously, you know what to expect: sloppy price action, consolidation, those kind of things. So I'm just gonna look at Tuesday, and also Tuesday being the day post bank holiday, the New York AM session is most likely going to be sloppy. So you want to focus on the macros, the pre-market, because the New York AM is likely going to be, sloppy. That's like a day post bank holiday protocol. You know, you experience sloppy price action. So you want to focus on lunch, trading the lunch, or you just focus on the macros, but avoid the AM session. If you are going to trade the AM session, you must have reasonable stop losses. On Wednesday, we have FOMC meetings at 2 p.m. So that also gives you a clue of how this week is going to perform. It's going to start very slow. I think you are going to see movement from Wednesday 2 p.m. So whatever your weekly or daily bias is, you must expect to see expansion towards your weekly or daily draws from Wednesday late. You're going to start very slow. It's going to start very slow, and then expand on Wednesday late Wednesday. Thursday, we also have red folder news event at 8:30. So if you're thinking like a high of the week, low of the week, 75% of the time is on Tuesday. But looking at this week, we don't have core CPI, we don't have like any red folder news on Tuesday, so it could be on like Wednesday or Thursday. I think they might use the FOMC meetings to give low of the week if we are bullish, if we are bearish high of the week, and then Thursday and Friday to then go towards our draw, right? So we are going to be generating liquidity for FOMC. I think on Monday, Tuesday, we might have like an in-day range on Monday. We might have like an in-day range on Tuesday. That's what I'm expecting. So I wouldn't be surprised if um we see those kind of price actions, because that's like consolidation, right? Once you see an in-day range, what an in-day range is basically a daily candle that's within the previous day's range. So the daily candle, let's say for example, if I say we are likely gonna experience an in-day range on Tuesday, it means the Tuesday's daily candle will be within the uh Monday's high and Monday's low, so it will be within that. So it's an in-day range. That's what an in-day range is. So I'm kind of expecting a lot of in-day range. Then Monday, Tuesday could be an in-day range. Maybe we might, break out on Tuesday, but Monday definitely, I think we are going to have an in-day range on Monday. But also, it is to be studied how it closes, how it, in comparison to Friday's price action. Obviously, that is to be studied. So let's go to the dollar index and have like and then obviously on Friday we have that 8:30 red folder news event. So that means the pre-market will be good. So pre-market is anything before 9:30, right? So from 7 o'clock to 9:30, that's like New York pre-market, but also London is also pre-market because it's before the opening at 9:30. But when I say New York pre-market, it's 7 o'clock to 9:30. So um, I'll be obviously studying the 850 macro, 750 macro, and also the 910 macro. 850 macro, 750 macro, sorry, yeah. Those are because I'll let the first 30 minutes from 7 o'clock print out, and then I'll be interested in 950, 750 to 810, and then yeah, I'll be looking at all those kind of signatures in price action, looking at the smooth lows, smooth highs, on my gold. So I haven't been, performing well in the boot camp recently. I'm trying to also have like when you're trading with the boot camp, there's a lot that you're handling, that you're managing, a lot of people's feelings and all of that. So I'm learning to actually master that, and I'm very slow in my executions because I understand some people will take losses. So I have to, kind of stick to one trade, a day, because when I'm trading alone, it's a complete thing when I'm trading all by myself, so so like for example, I might anticipate um a move higher. For example, let's say I'm trading here on Thursday. I might anticipate a move higher before the 8:30 news, and I would see like, okay, even though my rules say I trade uh post the red folder news event, sometimes the market is clear and I'm human and I want to engage that before the 8:30 because I believe it's going to be an impulse movement to my direction, which is wrong, by the way, because I should always follow my rules. But sometimes I can do that and be profitable. And when you're trading, you can't do those things when you're trading with the community. So that's one of the lessons I learned on Friday. Even when I'm trading by myself, I'm still trying to, um, kill that demon and just wait for the news event, and to go past, and then after that you wait for what you and see if you still stick to your bias, or yeah, your short-term bias rather, because in many cases with the current market conditions, you might find that the news came in with displacement and they are now sponsoring an opposite direction, or an opposite price delivery to what you're anticipating prior to the news event. So that's like a lesson that I got on Thursday. I thought I should share that as well with you guys. Okay, so let's go to the 3-month time frame. I don't know, guys. I'm just gonna use like a split screen like this, and I'm just gonna have okay, Dixie. Yes, I'm just gonna remove all of this. So I'll be pointing out this is a price delivery continuum. So what that is, basically a price delivery continuum is when you're looking at the high time frame in sync with the lower time frame. So you're looking for high time frame PDRA, and you are studying how the lower time frame lower time frame price action is responding to that PDRA in on the high time frame. So I'm gonna have the 3-month on the left, and I'm gonna have the 1-month time frame on my right. Okay, so if you look at this dealing range here on the last quarter, obviously we've entered the discount of that. And what do we have a discount, right? So we have this okay, let's first look at the where is my, I'd like this to be up here. Yeah, there you go. Yeah, let's look at the fair value gap here that price is currently trading on. So that's a PDRA discount, right? This is a PDRA at discount, right? And then also we have that bullish order block right there, right? So I'm just gonna sync this in layout so that we can see how the weekly, the monthly is responding to this, right? So that price moves from discount to equilibrium, right? And looking at how we've already met, we've filled this imbalance here, but we just tend at the upper quadrant so far, rather. Okay, so if you're looking at the 3 months, this is the first quarter of the year, right? No, this is Q2. Now we are entering Q2. Sorry, we just entered Q2. This is April, so this is going to be April, May, and then June. This candle is going to close in the next 1 month and 6 days. All right, 1 month and 6 days. This candle is going to close. So where's the opening? Is up here. So what did we do here? Relative equal lows, swept. What did we do below that? We filled an imbalance. All right, and if I look on this price leg that broke above here, I say displacement candle that never got swept, and we have now what? Relative equal highs right there. So this is a long-term bias that I hold, and it could change over the weeks, you know. But I'm looking at this and I don't see any reasons for price to go lower from here, you know. So also I have this guy here. This is a, just going to use a yellow, just going to use a yellow. There's a BPR here. So this BPR here, I'm just going to go on synchron layout. All right, so if you look at this BPR here, we served buy side when lower, bearish market structure shift, respected this fair value gap, but only went as low as rejection blocks there, and then we disrespected it with displacement. I'm looking at this move as nothing but a retracement, and we're already at discount, which is good. I think maybe if I can open the 0.62, we've also hit the OTE level right there. So there are a lot of confluences there if you look at the 3 month time frame. All right, so let's go to the monthly now and focus on this month. So we opened, this is obviously May. We opened, went all the way up, and then now, excuse me, we are pushing lower. So how far, or what is the draw below obviously current market price, which is that on the thingy, on the monthly. So I'm not gonna have the weekly on my left here. The weekly, this is the weekly, and this is the monthly. So let's zoom in on the monthly first, right? So on the monthly, we also notice that we served those relative equal lows right there. We served those relative equal lows, right? We served the relative equal lows, but also closed above the body close. The body close is above those relative equal lows, which is also another bullish signal to me, because we are not displacing below those relative equal lows, you know. And then I think for now, what I'm studying short term is the CE of this. So I'm just gonna sync this in layout, and that's like a short term bias. You know, as much as I'm kind of leaning bullish long term, but I think my short term bias right now, it has to be that monthly, because you're on the that monthly a discount week CE, because I'm looking also, let's look at the weekly now. I'm not going to use this. I want to study how price reacts and how price closes below this this weekly CE right here. So I'm just going to have that. Okay, let's put it here. Let's get the prices here. Let's get the prices. So the price right there, remember I synced, this is the week CE from a monthly. So let's get the coordinates. The coordinates is 9878, 9878, sorry, 98.78, 98.780. I'm just gonna have this bold, dotted, and lock it, and then name it monthly week CE. There we go. And I'm just gonna remove this. And then this is the BPR. Remember the BPR? There we go. So I'm looking at the previous week's candle Obviously it's very strong to the downside. I was looking at this. Let's go to the hard time frame and remove all of these things here. Let's remove all of that. Now we just have that monthly. Let's do like a 3. There we go. That's a 2. Okay. I'll just do that. That's fine. All right. So excuse me. Let's have like an overview of what happened on the weekly here. Also on the weekly, you had these relative equal lows down here, and if you look left, the only imbalance we have is down here. And yes, we can also go below these relative equal lows, but that will be determined by how we close below this sell side right here, and also below this monthly. So if I get a daily close, a strong close below here, then I'll start looking down here. You could go and reclaim this imbalance. You also have that inversion fair value gap. You have a bunch of things. You also have this discount and also this relatively equal lows here, which it's possible that we can just go down, all the way down there. All right, so as much as on a 3 month I'm bullish, I can't stick to a bullish bias. I have to narrow my bias and have like a short-term bias and say, even though on a long, like on a higher time frame, I am bullish. I'm not swing trading this. So I have to have a weekly, a daily, and I have to take everything day by day. And then my bias is refined on a daily basis. So looking at this retracement here, I was obviously looking at this imbalance here, and I'm also gonna do something that I'm gonna show you guys how to have like a narrowed uh, a bias, and something that's gonna give you like a clear short-term bias. So I like to use the imbalances and the swing highs. So I want to study how price closes above swing highs, and that weekly candle right there. Obviously it gave me a bearish bias when that happened, because I was already okay. And then so displacement now closing below the opening of the last up close candle, I was like looking down here, looking at that imbalance, and then and also failing to close above the rejection blocks right there, and closing below that last up close candle. All of those things, displacement, fair value gap, displacement again, and closing below. We closed below that swing low right there. I knew that price is most likely going to continue to the downside. But also, if you look, there was a small fair value gap down here, small imbalance here. See, I think I had that, which was previously respected right there. Now we got a body close below that. So that's why I'm leaning I'm kind of bearish, because I want to see how price reacts to this. And obviously the next draw will be the swing low here. That will be like the short-term draw. So once you see a PD array that was previously respected get broken down like that, once we close below it like that, these are the true support and resistances. I wasn't expecting price to go all the way up there. I thought we were gonna see it go up, but not close above this guy if it was bearish, and just stay below it. But it happened, it happened, but we failed to close above, and we even failed to close at the lower quadrant of that inversion fair value gap here. This was a BC, buy side imbalance, sell side inefficiency. So it's an imbalance going up, and it was lacking sell side, which was delivered right there one time and closed above it. But the following time, it was actually violated. So now it became a BPR. Actually, this is now a BPR, single pass up, single pass down. So this BPR was now respected. It is also acting as a true support, because it was respected right there. and then now it got broken the second time. Now we're retesting it from below. It is a resistance now, and look at the bodies, they're failing to close inside that, so it's now pushing it down, and we are most likely, with the momentum that we are currently on, you could even see it go to this sell side, sell side delivery. Then we have to study again how price closes on a closing basis. How did price close below that sell side liquidity on the daily? So this overall, short term wise, I am kind of bearish on DXY. Let's zoom in on the daily and look at because we have to look at the I'm going to show you the IPDA. Let's delete this. Let's delete this. There you go. So let's do like a cast forward method on this, starting from the swing high that we have on the daily chart. Let's look forward 60 days and see where do we expect and when to expect like some kind of a retracement or reversal or continuation. So the 60 days that I'm doing is actually, we have 20 trading days in a month, so 60 days is basically 3 months, which is a quarter, right? So the last quarter, the previous one, we saw a nice bearish movement to the downside. I'm taking the last swing point on a daily, and I cast forward 60 bars, not 84 days, because this includes the weekends. I'm taking the daily candles here. So I'll look at the 60 bars, right? Casting forward 3 months, we are bearish, and then we reached a discount array, looking back here in the form of a basin here. And then this is when you get to see, so this is a deciding day. Do we turn and have a bullish market structure shift to give a new bias for the next quarter? Or is it going to be a continuation? Obviously, if we disrespect the discount array, looking back 30 days, 60 days, 20 days. So if you look back from here, it was okay from here, from this point, it was what? Sorry. 60 days is right here. So we set those relative equal lows here, closed below them. Obviously, if you look back here, that was more than 60 days back. Looking back from the initial starting point of this quarter here, and then we swept that and we closed below it. So now I'm casting forward another 60 days, and we've been bearish for the last this quarter is going to end at because this is June 1st, right? Algorithmic wise, right? It's going to end at the 1st of June. So obviously we are either forming, or we are either I like what I'm seeing on the daily. Look at that BPR right there. Let me just name it because I don't want to end up confusing you there. Let's use green. Let's use that. This is a weekly BPR, right? Look at the bodies. Look at the bodies here. So looking at this, we're an imbalance here with a volume imbalance, sorry. Respected it, pushed lower, closed bearish right there. There's a change in state of delivery. Yeah. Now after closing bearish, there's something I want you guys to note. I think Thursday or Friday. That's beautiful. All right. So this was a bearish change instead of delete, meaning the order flow turned from bullish to bearish right there. Displacement violated this BC here, closed below it. On retracement, we had this BC again now, CB. Sell side imbalance, buy side inefficiency. Obviously, when these signal pass up, signal pass down, this portion here is a PPR, right? This portion here is a PPR. And then also, obviously, you can see that it is now weak and strong to the downside. We just opened for, this is Monday's price. We just opened. And we opened, I thought it was just going to gap down and open with a gap opening. This is not a gap opening. We just created a small weekly new week opening gap here, which is price is currently seeking to fill. I think we are coming all the way down here, relative weaker lows, and also this monthly week CE rejection blocks, and also the sell side that is down here. But this was beautiful on Thursday. Thursday was just a beautiful buy on EU. I was just gonna look for buys here, but I wasn't trading EU. But this was just beautiful because you could see that it disrespected this discount BSC, and also there was a new change in state of delivery here. All right, change in the state of delivery. Yeah. So yes, short-term wise, yes, I am leaning bearish, and I'm obviously looking at I'm now going to remove this. We also just closed on a daily basis. We closed below that previously respected PC, and the body here stayed below that. So if anything, I don't think we're going to come all the way above it. I think we're just going to stay heavy on DXY, and that gives us a bias for EU, because EU is inversely correlated to DXY. So obviously on EU, I have let's go to the daily chart and not waste time. So in EU, I'm looking at the rejection blocks, these relatively equal highs here, short term, and also these rejection blocks. And if DIX it stays heavy, I'll be looking at the that swing high right there on a weekly, or rather on a monthly. Let's look at that week CE again. The week CE is right there on EU. So let's have that coordinates 1.14802. And let me just do this. There we go. So is the sound still good, guys? I haven't been reading the comments, eh? I'm gonna take your questions, guys. I'm gonna take your questions, quick. I'm gonna take your questions. Let's just finish this up first. We are late, guys. We are late, and we just opened for Monday. Okay, so I'll have that, and obviously above that I have those. I'll have this buy side here. So I like to because I won't be participating today. I like that because I'll get to just look at Monday, look at how it printed, and see if on Tuesday I still maintain my bias. which is very important. You just don't go buying this or buying EU the whole week without constantly refining your bias and looking if the daily candle stays below this and that previous Thursday's high, and what is it doing on the hourly, on the smaller time frames, and so looking at the hourly chart on EU, or let's just focus on the 4 hour for now. Looking at the 4 hour chart, let's look at the 4 hour with the bias that we've established. What can you see here? Can you find any market maker buy model? Can you see any market maker, maybe AMD profiles? Okay, what can you see? What can you see to support what you've already identified on the hard time frame? This is price delivery continuum. Okay, what are you seeing on 4 hour that also confirms what you are looking for? I'm looking at the premium array. So obviously, if you're bullish, the premium arrays here should be violated. This fair value gap, I like it because it was respected right there. No, there was not a body close. So these kind of fair value gaps, guys, let me zoom in. This is very important for your notes as well. These kind of fair value gaps, right, like this one, are most likely going to be revisited because there is no body close here. This is also a gap. So this is a gap, and that's also a gap. So it is most likely going to be revisited. And look at the bodies here. Look at what they did. They filled it and then eventually broke higher. And now we are looking up here for a short-term draw. Let's see if this buy side has been engaged as well. This is a low-hanging fruit objective here on EU. And then obviously you can also focus on the week here for support. Any retracement to this week CE on a smaller time frame, 15 minutes. You can then look for longs there. Okay, and there's a fair value gap which has been filled already. So I think maybe you just focus on these relatively equal lows. Once they get swept on 1 minute, 5 minutes, then you can start looking for longs because sell side has been engaged. And if you're bullish, you just wait for sell side to be engaged during any kill zone that you'll be trading, and then you look for a continuation or the opposite delivery. That's how I trade my that's how I place my trade. That's what I look for in price action, at specific times of specific time of day, obviously. But I'm still leaning bullish on EU, obviously, until proven otherwise. What would make me change my bias and flip bearish on EU? Obviously, it will be closing on a daily basis below this, and obviously with displacement, this is a short-term draw for me, relatively equal highs, and then that weak CE rejection blocks and that buy side. What would change my bias on EU? A displacement, a long displacement closing below that swing low, that would cause me to say, okay, maybe sentiment is changing. Let me now focus on maybe the shorts, something like that. But I think obviously I'll be using the dollar index. Once we close above this guy again, then I'll start leaning bullish long term, and I'll be in alignment with what I discussed earlier in the stream. Can you touch on how you do a 60-day look back? Can you touch how you do a 60-day look back and cast forward for your analysis? Okay, I'm gonna do that. What is the price on Nasdaq and gold today? We're going to go on gold. Shortly, you're going to do gold. So keep the questions coming, guys. I'm gonna answer you, and please, guys, you let me know, how did you know that I was live? Did you guys see on TikTok? Are you from TikTok? Are you from Discord? Are you from where are you from? Let me know. Let me know. So, because I also want to check and track which obviously socials. Okay, so I think with that being said, we are done with our focused on DXY. Obviously, lower dollar means a risk on assets, because dollar dropping means things like EU. Excuse me. It means like foreign currencies are gonna be, you know, surging, meaning going higher, right? So that's a risk on scenario. Once the if the dollar is going up, it's a risk off scenario because it means foreign currencies and other asset class is going to be dropping. Excuse me. All right, so I'm going to show you how to do the cast forward and the cast thingy. Let's just focus. Let's go to okay, let me screenshot this. Okay. Minor buy side liquidity on uh, minor buy side liquidity on EU, and then I have that. There we go. And then this is DXY. So let me share this on let me share this on uh, let me share this on Discord, you know. I'm just gonna go on and share this on Discord. I want to see DXY stay below here, stay heavy, gravitate towards the monthly, and then the sell side liquidity down here. Copy. I'm just going to share this on DXY. Now the thing is with me on that's why I don't like sharing my bias on Discord, because sometimes I'm late to update you guys. If I change my bias, I just write it down on my channel here, which is not right because some people are gonna, you know, continue looking for lower prices when I am now looking for high prices on DXY because I've seen signatures and price action that suggest I flip it. You understand? So it's not a good thing, but it's good. But it's all the problem is I'm not gonna always send a screenshot because I'm busy with too many things, you know. Sometimes I'm just too busy, you know. I forget to share it. But it's fine. Let me just share it, and because you guys are here, you obviously know what I anticipate and what will cause me to change my bias in this case. So we also have relatively colors down there, which is minor sell side. I like that. Those relatively colors there. So obviously, if I was if I was about to if I was gonna trade Asia, that's my draw right there. Minor sell side liquidity. Minor is wrong. Bottom right. Let's put it at the center middle right there. See, minus outside liquidity. Let me do this. And bottom left. And I'll have this. So you guys can take a screenshot and see if this will be delivered. We've already took our previous week's low right there, which is a very significant. So you can just have a retracement, then later on drop during maybe London or New York. Which is also good, but it's good to just wait for this to print out. And I think let's go to 1 minute and see what's happening there. So if you look on 1 minute, we opened and we cleared buy side liquidity here. Let's just get the, have we reached this high? Yes, we did. So accumulation, manipulation. Now this is a displacement, nice displacement. And obviously we had this previous week's low. Did we close below it? Yes. So we can just drop and go all the way to our minor sell side right there. So obviously those would mean trading EU, but we don't trade before 7 o'clock if you trade Asia, you know. So you just wait for it to print out, and yeah, but I like this. This is beautiful. If I was trading, it was during the kill zone, I was gonna go short here on retracement and aim for these relatively equal lows right there. Just go short like that, but that's not what I'm gonna do. The market just opened, you know, they can just do anything because we just took out the previous weekly low anyway. I'm not interested in taking shots right now, but I already like this. What I can do is, since I'm just down here, I can just have my new week opening gap out. The opening price at 6 o'clock on 1 minute. The opening price for an up close candle is down here. So I'm going to have that new week opening gap low and then log it, current new week opening gap low. Then I'm going to have the closing price on Friday. The closing price for a down close is that price. So I'm just going to also log that and have it stay on my chart for the entire week. Let's go back to the daily chart. That's it. So that's it for me, guys. Let's go to let's go to let's go to gold now. So obviously with a lower dollar index, let's remove the drawings. I sent you guys my analysis on gold. Yes, remove them. Yeah, remove them. Okay. My analysis on gold, I don't know if I sent it on Discord. Let me see, because I can just pull it up and show it to you guys. Commodities. Let's look at commodities. Commodities. Asanta. I actually have trades running on gold. Damn. I'm gonna check them out now. Hopefully we didn't gap lower. We did. Maybe I'm out at break even. It doesn't matter, just more positions. Anyway. Okay, let's go to it's just runners. Okay, I think I shared my I did share my bias on gold. Obviously, let me touch on it a little bit. One more time, let's just touch on this gold. So obviously on gold, I started on weekly. Actually, I started on monthly, right? I'm just going to highlight this. I'm going to talk about this one more time, guys, because it's very important that I do. So this PDRA here is very important. It tells you when to expect long, big candles. You know, when to expect impulsive, um, when to expect large range candles on a monthly, on a weekly, prices fractal. What happens on a monthly because of one PDRA happens on the 1 second because of the same PDRA. So if you look at this, this is a monthly time frame. This is a previous monthly high, and the opening price for this monthly high, which was April 1st, excuse me, we opened and went all the way down. We hit the high of the previous, which is February monthly high. If this happens and we don't leave a fair value gap, guys, this signals a strong uptrend incoming. So if it's the opposite, if we open, for example, we open and we are going to be bearish, we open somewhere, for example, let's say we open, okay, how can I, let's just look for it. Let's say we look for, okay, let's look for it there. You see this, if we open the next month and we do this, we hit that, you must expect this. All right, long down close candles or consecutive down close candles. That's this PDRA is called immediate. It's an immediate rebalance. All right, so immediate rebalances, that's a strong signature in price action, signaling momentum incoming. So this happened right here on the monthly. It even went below that. But ever since we went all the way higher, we finally left a fair value gap here, which was filled. The bodies failed to enter and close below inside that fair value gap, displacement going higher. And then on this month, what happened? Boom. So if it's perfect like this, you must anticipate long candles like that. So it happened right here, and it just happened also again right there. So this is called immediate rebalance, and it is very strong signature in price action to anticipate large and up close candles. So on a monthly, we just we just made an immediate rebalance one more time on gold. So this is obviously a long-term bias that I'm on overview that I'm kind of framing here. I have this long-term bullish bias looking at the immediate rebalance. Two things: immediate rebalance, one. Two, we closed bullish at all-time highs. I'm not going to look left here. I don't have anything to focus on. I'm looking at the body close. It closed above this previous monthly high right there. So obviously with that alone, I can just focus on either the CE of this to be delivered at premium, and but in most cases, obviously it's the high that gets to be the draw, right? So I'm kind of still locked in. I have that bias for gold, and we've already made it to the CE of the month right there. So I'm just going to be using the CE to frame my trades or to enter trades. I want to look at how the price behaves around them on the smaller time frame. Let's go to 0.29. This is obviously the monthly week CE. So are you guys not working? Are you guys not working, studying, or why are you guys up so late? You know, I wasn't thinking you guys are gonna be here with me, you know, at this time of day. Because right now most of y'all are South Africans. It's now 22 past 12 in the morning, and you guys are here. You guys really want this money, hey? you guys, you guys really want you want this money. Okay, buy side liquidity. So I was thinking, since okay, there we go, buy side liquidity. All right, so I have like something for I want to have more people trading with me, guys. I want to raise a lot of professionals. I want to have as many professional traders in South Africa as possible. I want to be the hub of real professional traders, not these other guys, man. I don't want to even mention their names. So looking at the recent dealing range. So what is a dealing range, guys? A dealing range is a range with both liquidity. So for example, this swing low to that swing high. Obviously, if I'm looking at an upward movement like this, if I'm looking at an upward movement like this, I draw my Fibonacci from the low to the high so that I can get the quadrants right. And also if I were to have like a standard deviation, I can have the right standard deviation. Like for example, a point negative, let's say -5, -0.5, you know? So I can just say bang. All right, I don't know what's happening here. ICT quadrants. Okay, it's just it keeps disappearing. So let's do it again. I have that, and let's have a -0.5, -0.5. Where are you? Where are you? Where are you? There, bang. So I think price is most likely gonna go all the way up here, but that's not my draw right now. I'm focusing on this. I can also get a -0.25 up here, which is a very conservative fulcrum point on a daily. You can do this on a weekly and also on a daily, right there. Okay, so we have that. So I'm looking at the most recent dealing range on a weekly, which is a dealing range is a range with sell side liquidity purged. Let me remove this. So that low is a dealing range low. Just gonna zoom in so you guys can see. So this low has sell side liquidity. From this, it's an internal range kind of liquidity in the form of a fair value gap right there. So we have that. So that gives us the swing low, and then a run higher. That's a swing high right there. It has buy side liquidity from right there. Okay. So that's a dealing range high. This is a dealing range low. I can also take this as my dealing range low, excuse me, and my dealing range high. But I just want to have like a, you know, because this move to the upward, I would say it started right here and then it went all the way up. This is just a retracement, but also it's also a qualified dealing range. This looks similar, but I just want to take this. It gives me that broader perspective. All right, so if you look at that, you want to get where is price? Is it premium or discount, right? So we are still in this range, but you know that price moves from discount to premium. At discount, what kind of PDRAs do we have? So I showed you already on a monthly. We have that immediate rebalance, right? This is the immediate rebalance that we had on a monthly, but also if you're doing a price delivery continuum on a smaller time frame, what PDRA do you have on a smaller time frame that aligns with that? On a smaller time frame, we had this fair value gap on a weekly, and look at the bodies. Did the bodies close below the fair value gap to disrespect it, or did the bodies respect it? They stayed above, and they also stayed above, even above this relative equal lows right there. So that's my bias. I said from here, looking at how it closed and looking at that, and also the immediate rebalance, I'm anticipating strong move to the upside. And I'm looking at this this weekly monthly week CE, sorry, as a short-term draw, but eventually I see price go all the way up there to the buy side liquidity. And also you have these relatively equal highs, which is a nice smooth edges. If you go to like a daily 8 hour and obviously 4 hour, you'll find those relatively equal highs right there, beautifully and smooth, you know beautifully set. And this is narrative. Obviously with that you can anticipate price going in all the way up to this buy side here, which is above the monthly week CE, which is currently our short-term draw here on gold. And also we're having a bearish dollar index. It's a risk on kind of scenario, you understand, because gold is bound to go higher if that's the case. But at premium of this dealing range here, we have buy side from there. So we can also look at this dealing range right there. So we are looking at this dealing range from up to down because the price. So you can see that we are currently at premium of that dealing range, and we have a PDR in the form of a CB, right? So we want to see it disrespect this CB because we are bullish. We are bullish. What is happening here? Go. This I have a lot of these immediate rebalance. So we have this guy. We have this guy. Let's look at the bodies. Did we respect it? So far, yes. So far, yes. The bodies have they respect this. They respected this premium PDRA, right? So if this something like this happens, right? If something like this happens, you just want to give it a day or two. You're just going to trade on a smaller time frame. Your bias is not clean. We are at premium and you're anticipating premium arrays to be disrespected if you are bullish, and discount arrays to be respected. I love the fact that this was an institutional order flow entry draw, but I want to see price disrespect this fair value gap at premium. So at discount, I'm just going to first look at this CE. We open, watch the CE, does it respect it? If it doesn't, it melts low. I'm not going to take the trade, but if it does respect it at the right time of day, I'm just gonna go long. I'm still bullish, but I'm not gonna hold for long. I'm just gonna be scalping my buys. Like I'll just abandon my bias for then. I mean for a short while, and then I just stick on like short scalps or maybe long scalps, like going long, going short intraday, and just target any low hanging fruit. And once I see a close above this, which means disrespecting this fair value gap, that's when I will now open a bigger leverage on my trades because I'm now confident in my bias and I'm having confirmation on a high time frame. So on a smaller time frame, I'll just look for um, things like even the weeks are caps. So let me just do this, but I can't see the comments properly. Let me just do this. And where are the comments? Where are the comments? Where are the comments? Why is this? Oh, there we go. There we go. There we go. There we go. I see it. I see this. Okay. I see your comments. I see your comments, guys. I'm gonna focus on them shortly. I'm gonna answer everything. So yes, I'm staying bullish. I'm bullish on gold. But obviously I'll have to look at this. This is the dealing range that we are currently on a 4-hour time frame. Obviously, we have this as our equilibrium and we have a fair value gap down here. So I'll be looking for longs down here later on today. Should I decide to engage, but it's most likely gonna just stay bearish. Maybe it's gonna stay here. Maybe on Tuesday we can see something like this. A bearish day that stays inside the fair value gap on 4-hour, because I don't think we're going to have that kind of momentum, and then Tuesday maybe we might inside this 4-hour fair value gap open, sweep the low, the daily candle, and close bullish on Tuesday. Do you understand? And close bullish on Tuesday. So something like that can happen. So that's why I'm saying we could experience an in-day range, because if that happens, it would mean Tuesday, sorry, you can't see it here, but this is the dealing range I had. It will just stay inside this previous daily, because it won't take the previous day's high, it won't take out the previous day's low, so it can just stay inside that 4-hour because of the bank holiday that we are. So that's the roadmap that you use. And also on the 4-hour, let's look. I think this CE here is in line with the 4-hour BC. Let's see if that's the case. It is a high probability. Oh, it's just below here. It's just below here. Yeah, it's just below here. So if it does come all the way down here, it can leave this unfilled, because it will be sweeping relatively called lows right there, institutional order flow entry draw, and that will be signaling uh, weakness, which is if it fails to close at the discount of this BC right here. If the body fails to close below here, that will be a good sign. That will be signaling weakness, and it will be telling us that it actually wants to push and close high. I like the fact that on a daily we closed above that weekly BC already right there. That's a good sign. And we left relatively called highs there, did we? Yes, we did. That's narrative. I like this on the 4-hour rather. This is narrative. This won't stay. It won't stay like this for long. Smooth highs are meant to be jagged. This is smooth edges are meant to be check it. So I'm just gonna have that. I like this. With my bullish bias, I'm already happy. This is narrative, you know. Retail guys will think this is a strong support area or resistance area. I'm coming. I'm coming for that. I'm coming. All right, so that's my bias on gold. You already know. 4 hour. I'm looking down here. Obviously, staying bullish until relatively equal highs. That long-term buy side because of the monthly immediate rebalance down here. I like this. So I can also do like a cast forward on gold. Obviously, I can just take it from down here when we made this swing low, cast forward 60 days and see to show you how you are going to anticipate. Oh, 30 days, bro. Look at this. Boom. What happened? 30 days from the swing low here. You broke structure, changed date of delivery, violated this. I pointed out on one of my posts on Discord, right? I said if this gets violated, it's gonna be an inversion fair value gap. I was looking at the 30-day forecast. So I think fast forward 60 days, you can already tell if we violate this premium array here, you can already tell this is where we are coming. And then which means we've just started. So this is like very close. And if dollar keeps melting, obviously gold will be surging because gold is the base and USD, which is the DXY, is the code. So if this goes lower, loses value, this goes up. It's basic information, right? Since it's like this, you don't need to cram and say, okay, if dollar index, then well, why does gold go up? You just know it's in the name. It's XAU gold. It's gold USD basically. That's the symbol. So gold is the base, meaning if the code loses value, the base obviously it's like a seesaw kind of situation or kind of scenario. Hope that helps, you know. And then yeah, I'm staying bullish on gold. I like the fact that we displaced above this inversion fair value gap. I like it. I'm still bullish, but short term wise, I'll demand a daily close above this to then have a bigger leverage on my longs. You know. What else do we talk about? Please post this live because stream is lagging on my side. How about Botswana traders? Because I would love to be in your team. You want the wax, bro? Everybody is allowed. I have to. I think I'm gonna run like um, a full time, at least for like 3 5 weeks. You know, um, live trading. I'm gonna charge very. I'm gonna be like it's gonna be a cheap one. It's gonna be a cheap one, like maybe 360 to join. Something very cheap. I need like 300 people on there. You know, we're gonna go live every day. We're gonna trade live. Sometimes it's not even about live trading, you know, just the psychology of trading. How do you build wealth? You know, those kind of things, and how to trade every day, intraday, how to navigate the markets. Kind of like a mentorship, like as a very because my mentorship is expensive. 10,000 rands, not 10,000 US dollars. 10,000 rands is quite expensive for most people. So you can have like a weekly. You can just join the class for like 2 weeks and then we discuss these things and then we trade and then every time I go live like I'm gonna go live to trade and you guys join. I'm gonna announce on the channel, let's go live, and we go live and we trade and we discuss the market, the psychology, how to grow, how to build wealth, you know, with Psychedo. Let me know guys if maybe you'd appreciate such a thing. You just hit me up on my DMs, Instagram. Tell me if you appreciate something like that. Then I can just put up a poster. We can make it work, because I'm a trader full time, man. I always have time for these things. So I also want to give back like that. So yeah, that's it on gold. Let's go. EU's already been covered. What else did I say I'm gonna cover? Bitcoin. Let's not make this a long live session. Obviously, lower dollar. Bitcoin also is the base. US dollar is the code. At lower dollar means higher Bitcoin. Obviously, guys, you don't need to know risk of risk. Like that sounds fancy, I know, but you just need to know if dollar is going lower, these kind of things will be going higher. So 3-month Bitcoin was beautiful, guys. I'm not gonna lie, this was easy as well. This is a 3-month chart since 2020, right? Impulsive leg to the upside, retracement, they call it the bear market, expansion. So now looking at the 3-month, we had this bullish order block right there, fair value gap above it. We had two fair value gaps breaking structure. If we are bullish, we shouldn't come all the way down here. If we do, it should be an institutional order flow entry through. Shouldn't close, it shouldn't even reach the CE if price is bullish. If we does that, it means a reverse